The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 1st magnificent Monday edition of Hour 2 of the Trader's Edge. I'm host Steve Rhodes, and hope that you are off to a great start of your day, and most importantly, that you had just simply a fantastic holiday weekend, great Thanksgiving, a good time to relax and all. And let's remember that you and I, we need to do everything that we can do to make sure that we have a magical Monday. That's got to be our number one outcome. We should always remember, though, it's dreamed about. Well, that is what's talked about is really a dream, right? What is envisioned. That's not something that becomes exciting. And, of course, what's planned becomes possible. But, folks, what is scheduled, that becomes real. And I know that you scheduled some time with me here, and I am grateful for that. So thanks for doing that. Of course, I'm here to serve you. That means you can give me a call at 877-927-6648. Internationally, you can reach out at 727-445-1044. That way you and I, we can go hunting for bulls and bears. Remember, if you've got a question, somebody else has that exact same question, so don't do it for me. Don't do it for you. Just a simple, random act of kindness. That is the way to live, folks. This is magnificent and magical Monday. Of course, this is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, the Dow itself is down 86 points. She's trading at 17,741. The S&P down 14, trading out at 2,053. The composite off 44 points, trading at 47.47. Russell 2000 down 9 points, trading at 11.64. Gold is up $17, trading at $11.92. Silver's up 56 pennies, trading out at $16.05. Looks to have rejected lower price out there. Light sweet crude is up $1, trading out at $67.16. Lead the charge to the upside. You've got a lot of the gold and silver, either stocks, ETFs. You've got the ProShares Ultra Silver AGQ up 8% this morning. That's up $3. You've got the GLD up $2.60, up 2.5%. Royal Gold up about 4%. Haynes Celestial sneaking in there. She's up $2, up 1.8%. John Deere and Company up a couple bucks. Biogen BIIB, she's up $2. Rand Gold up $2 out here. Gilead up $1.30. Amgen up $1.26. Tesla leading the charge. The downside off nearly $10, trading out at $2.34 and change. Fleetcore Technologies off $8, down about 5%. Baidu off $7 and change, trading out at $2.37.47. Receptos down $7.47. Canadian Pacific Railway down $6.77. Emerge Energy Services out there down another 10% this morning. Kansas City Southern down 6. Greenbrier Companies off 6. United Rentals off at $6. Again, they're calling 877-927-6648. All right, so what are we going to focus on? Let's first go take a look at now. I pointed this out during the last hour, just as we were going to the break, trying to see what was going on. And we took a look at Apple. Now, I'll put the Apple chart back up on my screen out here. And during the time period, so there was a trade or block of trades that went off inside of Apple. And that was at between 9:50 and 9:51 this morning. We saw Apple move from 117.22 all the way down to 111.27. Pretty big range out there. Pretty big volume as well. 6.2 million shares during that block. So both a buyer and a seller inside of Apple is what we have going on now. That alone went ahead and helped to take the market in a southerly direction. It's the NASDAQ that has been the strongest. Of course, inside the NDX 100, you've got the weighting of Apple. Now, let's go take a look at the NQ. Let's take a look at a 120-minute time frame chart out here. So let's take a look at a number of the different Rhodes momentum indicators, signals that we can take a look at. So as we take a look at this chart out here, what I'm going to do is I'm pulling this back. If you watch this on Tiger TV, don't worry about not being able to read the names of all the candles out there. That's okay. But as we come back into the time period here, let me get my crosshair back here, which is on October the 20th. Actually was a little bit before that. It was right around, let's see, when did we break above that moving average? That's the 50-day exponential moving average on the 200-minute chart. The 120-minute chart out here. We saw price break above that level on October the 17th, and ever since that time period, that line has held as support. We've seen one test where we saw a piercing of it, and that was at about 4 a.m., between 4 a.m. and the 10 a.m. session. Really, it was between 4 and 8 a.m. We saw price move below that area, and then boom, as soon as the U.S. markets opened back up, we saw price move right above that level. Now, so we're in the same kind of situation here right now. That move lower inside of Apple. What we saw out here was this move lower and a crack of that same exponential moving average line, 4309.64. Now, this is during regular trading hours out here, so this move here is much more real than the move that we're taking, a look at back yonder. So a close below that says a change in trend underway inside of the NQ. Now, is there an A to B equals CD to the downside out here? Not so much out there. Of course, it made one of Stevie's favorite patterns out here. That's where price moves higher with less relative strength out there, and did that at 12 noon. That was 12 noon on November the 28th out there. Of course, our markets were only open until 1 p.m. The S&P actually gave us better signals, but that's what's going on inside of the NQ. Hey, let's go down the road to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding. How are you doing this morning?
Good morning, Steve. Thank you. I'm doing fine. How about yourself?
Excellent. Thanks so much for asking.
Okay.
You want to look? Yeah. Hey, how was your Thanksgiving? Let's start.
You know what? I had a great Thanksgiving. In 43 years of marriage, I think this was probably the first one that we didn't actually do it ourselves. We got invited to a family members, and we enjoyed the time off.
Oh, okay, that's good. So you think you'll make that an annual change to the normal routine?
I don't know. I don't know how things are going to work out in the future. I don't know.
Oh, you mean the other member might now realize how much work was involved, huh?
Possibly so, but we have children of our own, and they were busy this year with their own stuff, so that's the reason why it worked out that way. So.
Good. Okay. Now, you're looking at the VIX index. Tell me what you're looking at, how I can assist you.
Well, learned from you that a 10% move means a reversal.
Absolutely.
With a confirmation of it. We've broken above the 50-day moving average as well today. We're back. I think we're back below it now. Right now, I'm not sure.
We're right on it. We're really just sitting right on it.
Yeah, hair above it. What would you be looking for to confirm reversal for the market to go back up?
You know, I wrote about that in my newsletter this morning about the mere fact that on Friday we saw a 10% move, just above a 10% move in the VIX index.
Yeah.
So good spotting there.
So this is a confirmation actually of Friday too. I didn't even notice Fridays.
No, it's Friday.
That's not Friday.
Sorry?
That wasn't Friday. That was
Friday. Yeah, it was Friday. Yeah.
Friday?
Yeah, Friday had a 10.44% is my recollection as what the actual VIX one-day rate of change was. Now, what I put in the newsletter was, because I don't have any data points for a shortened trading session, and I wasn't sure if it's going to carry with it the same meaning. Now, the meaning of that is that 70% of the time since 2011, we've seen a bounce within 2 trading sessions. So we're into the fund buying time during the next couple of days out here. I think that the meaning to me is the following, Don. That is, if in fact we fail to see a bounce out here over the course of the next couple of trading days, that combined with the fund buying would tell you just how weak the market is just at the moment for a decent pullback here. Still a decent pullback that takes us into the longer-term, intermediate-term move to higher prices out there. Okay. And that's how I'm looking at it. I will tell you that my subscribers and I, we went short the S&P 500 on Friday.
See, I wasn't even messing around in here on Friday.
Friday was I've learned that the Fridays on Thanksgiving can be really interesting days, and no question that this past Friday was with the movement that we saw in commodities out there, and also a nice trade setup for going ahead and taking a short. Now, how it works out, I'm paying attention to the VIX index for sure. And so if it can close above that 50-day exponential moving average, 1457, you're at 1450 right now, so you're pretty much sitting right on it. That's also going to give us another potential 10% one-day rate of change out here. So it does say, the problem is it does say that a bounce would be coming. Right now the VIX is only up about 8.5%, so it's got a little bit further to go in order to get to that 10% level.
We've been at 10% at one point already this morning.
Yes, I'm sure we're at the high of the day. But Friday was the day where we actually got it. So we did get one, and that's why, even though we went short the S&P 500, it's not like I poured it on and said, hey, let's add to our shorts and so forth this morning. I really wanted to see a little bit more proof. I really wanted to see the summation index for all three of the indexes, meaning the New York Stock Exchange, the composite, and the Dow get below the zero line out there. Then that says, okay, now we have a change in trend that's taking place. So
you actually pulled the trigger at the 10% change. You didn't wait for another confirmation of that. Is that right?
We pulled the trigger at the open on Friday.
Okay.
So, there were a couple of different, there were basically three patterns that had confirmed for me on the 120-minute chart for the S&P futures, and then just simply going into the close, that gave us another confirmation. As far as trading styles, and really, it isn't even as I wrote about it. This is a very short, what should be a short-term trade. I'm looking for the market. Go ahead.
That's what I was wondering about, because I know that you're bullish overall for the foreseeable future.
The stock charts are. There's nothing that's changed inside the stock charts that would tell me from a intermediate or longer term time frame that the market doesn't want to move to higher price. That's still the reading as we speak right now. If the market unveils new information to us, then okay, great. But the Dow is off 100 points. You're down 40 right now. This could be a bit of yin and yang, and like I say, we took it as a trade, as a short-term trade. We'll probably watch how things. Well, I want to watch how things trade today, obviously, but it's probably a short-term trade, and it's really about paying attention to what pattern might set up that gives us the clue as to the move higher. Now, taking out the highs here from Thursday inside the S&P 500, well, that would tell me that even the market that should have moved south, which is not, that just tells us how strong this market is.
Right,
so,
I understand that.
Yeah.
Can you take another question?
Yeah, I take you get three more.
Oh, okay. Your overall opinion of the gold. I missed what you were talking about earlier about the GDX and the gold stocks.
Yeah. The move lower on Friday, that big move lower was about $29 or so, one of the larger moves that we've seen in a short period of time, because most of that move took place inside gold from around 12 o'clock or so afterwards. Hey, Don, would you want to hold on through the break here?
No problem. Thank you.
Okay. We'll go back to Don in Odessa. We'll talk about gold. 877-927-6648. Dow's off 40. S&P down 10. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 17, S&P down 8, Composite down 35. We're going to go back out to Odessa, Florida, to our man Don, who's trying a new Thanksgiving tradition. Let somebody else do all the work out there. And he said he liked it pretty well, which I can understand. Now, Don, so we're talking about gold out here. And before I do that, several months back, when we were taking a look at light sweet crude, trying to make a high out there, was it you and I that were sharing some maybe some emails back and forth about this would be the ideal thing for the U.S. to be able to, for the world really, to put pressure on Putin out there? Would be...
Yeah, I had it wrong. You were right.
No, I couldn't recall who it was. No. Isn't it amazing how that has played out?
It really has, and I am. It took so long for it to become very obvious, and that's why.
Yeah.
But. It looks like it's working, too.
No, yeah, for sure, absolutely, yeah, just to put a little pressure on there. Now, in the case of gold, a whole different story out here. Now, the CFTC puts out their commitment to traders data typically every Friday. During the holiday, that means it won't be out till about 3:30 this afternoon. So what I can tell you is that over the long haul, at least through the prior Friday, the commercial traders, the big money, the smart money, which presumed to be the smart money, had been taking a position that gold was going to make a significant bottom. So from the longer-term perspective, both in gold and silver, and they take a little bit longer to get those positions in place out there. That's what the longer-term picture looks like. The action on Friday, I think was a lot of non-believers in what you and I know to be true, that the manipulation or the ability to move the price of light sweet crude lower, is a nice economic weapon of mass destruction to put pressure on Putin out there. And I think that there were a lot of people that were caught on the wrong side of that trade, thinking that when OPEC was meeting that was going to be some kind of bottom out there.
Sure.
And so on Friday, when you're a commodity trader out there and you've got light volume trading, I think that people were just simply, whether it was margin calls, whatever, they were stuck on the wrong side of the trade, and they had to just simply throw out everything that they could just simply to raise capital. And I really think that's what we see has taken place inside of gold and silver. I don't know if my volumes are correct out here. If my volumes are correct on the current contract, which I know that gold was certainly moving down last night with lighter volume out here, but the volume's so light that it's a total rejection of these lower prices out here. And if gold just simply closes above its November 7th high, which is 1179 out here, it just says that the move lower on Friday was nothing more than a liquidity event.
November what?
The inside of the actual gold contract, I'm looking at the November 7th low, and so that's the swing point out there.
Okay, I see that volume low there.
Yeah, it's got 168,000 shares or so, and actually, if we even just go over to the GLD, probably to put that into perspective for folks that more easily can follow the ETF, just to take a look at it. I said it was November the 7th out here. So if I use that same swing point, that's got 10 million shares. And Friday's moved down. This is what kind of I wasn't so certain about on Friday, because there were still 9.6 million shares. But, when people are throwing up and they've got to just raise cash, that's when you can see those capitulation lows out here. So the GLD, if it gets above the November 21st high, 115.96, it would really say that the gold's got a lot longer to run to the upside. And really the same with silver out here. So that's how I'm taking a look at it. With regard to the equity positions, Don, I think one of the best equities to pay attention to for a signal is probably Gold Corp. Yeah. Because Gold Corp is the number one holding inside that GDX.
I actually own some of that.
You do? Okay.
So I've collected some free shares of different gold stocks over the years, so I just hold on to them.
Okay. Oh, cool. What's interesting about Gold Corp is it has been weaker than a handful of stronger mining equities out here. But what I noticed this morning was when I went from its swing point low on October 31st to the high on November 19th, its most recent high, it's only made a 0.382 retracement. If that's all that it actually does, that actually is suggesting to me, once Gold Corp clears 2142, that ETF structure, the GDX and everything, will truly take off to the moon. It'll make a much more than a 1-to-1 A to B equals C D to the upside. But 2142 is really its resistance zone, as I take a look at it.
I'm just curious
what
about
do you see?
Well, I'm right now looking at Gold Corp myself. I didn't think it looked all that great. It's bouncing off the downtrend line.
Yes.
From that 29.65 high all the way down to now, it just seems to be bouncing along that line.
Yeah, what you don't want to underestimate here is it's only made a 0.382 retracement, and gold itself made a 0.786 retracement on this morning.
Yeah, so that's strength.
This is really strength. So the mining equities are actually stronger than the metals.
Well, right. You've answered my questions efficiently and well, and I appreciate it, so I'll let you go.
You bet. Have a great day, Don.
Thanks.
We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow is off only about 34 points. That's the strongest of the primary indices out here, only off about 0.2%. So let's go see what's going on inside the inside of the Dow holdings out here. Now, lead the charge to the upside. You've got Chevron. That's up $1.65. You've got Visa up $1.44. Exxon up 96 cents. Leading the charge to the downside, you've got Caterpillar, Goldman Sachs, 3M, Boeing, Procter & Gamble. So let's take a look at Chevron, see what it's doing out here. Now, Chevron getting just simply hammered and nailed to the wall on Friday, gapping down 11.9 million shares in that shortened trading session, moving into a high volume low from October 15th that had 15 million shares. Now, we'll call today the real move of test and normal trading, as most folks should be back from the holiday weekend out here. So again, 15 million shares. So far today, you've done 3.5 million shares. If in fact Chevron at the end of the day closes inside of 109.50, you're above that right now, you're at 110.50, so another dollar to the downside, then what Chevron will do, or should do at least, is go test that low, which would be 106.65. Now, with this gap down out here, you've got some pretty significant. Today's actually just an inside session. So if we take a look at that, right now you can see the low of Friday was 108.43. The low so far, 108.68. So, and you can see the high's not been taken out. Friday's high was 111.69. The high so far today, 111.38. So an inside day. What's an inside day means? An inside day, if that's in fact how this candle session plays out, says that the prior trend that it came from resumes. That would be to the downside, and that would suggest moving. That's the dollar-wise, that's the biggest mover inside of the Dow out here. Point-wise, I don't have that number handy. If we take a look at the number 2 issue, dollar-wise, that would be Visa. Now, Chevron is about 4.6% of the Dow. So it's a pretty healthy weighting structure inside of the Dow. Visa, though, is nearly twice that weighting, right around 8.6%, although these percentages are off just a tad. I probably haven't updated those for about 30 days out there. If we take a look at Visa, it's up at the top of its trading session out here. Of course, you would expect during this season, I don't have a seasonal chart on Visa, but 'tis the season for Visa for sure. Where is Visa headed to? If I just take a look at expansions of swing points just to get a gauge here, I'd have to come back to January of 2014, January 21st, down to the low on April 11, 2014. And the 1.618 expansion is 260.63. You're trading at 259.78. So it's possible that this becomes a resting area for Visa as it completes that expansion move out here. It doesn't have to, but you want to pay attention to these Fibonacci expansion, especially of major swing points. ExxonMobil, she's up 94 cents today. That's about 4% of the Dow. If we take a look at ExxonMobil, looks like this is not an inside day. Let me see here. The high on Friday was 91.85. The high today, 91.90. So what you've got going here is a bullish engulfing, but that bullish engulfing with wide price spread, accelerated volume to the downside on Friday. That was 20 million shares going into 24 million shares, and we were in a light trading session. However, right now this morning you've rejected price. That means you've rejected the high of the October 15th session. That is 90.61. You close inside there. That says you go down and you test that low at 86.91. That's what's going on inside of the Dow. Let's see, what else do we have out here? Let's take a look at what's going on to the downside. Let's see what's pulling out. Let's take a look at Goldman Sachs, about 7% of the weighting structure inside of the S&P 500. Goldman Sachs right now, let me get rid of that, as that doesn't have any meaning to me. Come on, delete it. There we go. Okay. So if we take a look at Goldman Sachs, actually right now what it's doing is testing an area that should act as support. And that's this little gap up that took place between October 30th and the 31st. That had volume of 3.3 million shares. He'd done 612,000 shares in an hour of trading. That says you're going to do volume similar to that breakout session. Of course, that's straight line type math out there. Volume could easily fall by the wayside. If, in fact, Goldman Sachs today can, didn't mean to do that, can close above 187.10, your 186.61, do it with less than that 3.3 million shares, then you've got a support line, 187.10. If, in fact, you close below 187.10, then what you do is you start taking a look at retracement levels. So let's do that, because you are below the market profile support area. We've been below that for the last 3 trading sessions. That says, I like how John puts it, not okay to be long, okay to be short inside of Goldman Sachs. So right now you've just got, it needs to crack that support level from that gap up between October 30th and 31st. Now, the dead cat bounce, the 0.382 retracement level, that brings 184.50 into play. So close below 187.10, 184.50 becomes the end nut. I would have to say 179.44 would more likely be the nut that Goldman Sachs would try to move down to. That's your 0.618 retracement level. That's what's going on inside of that. Let's take a look at Caterpillar. That's off $2.41, about 3.6% of the Dow out here. So as we take a look at it is trading with 2.2 million shares into a level that probably wants to trade all the way down here to this level of support, and that's this little gap up that it had on October 23rd. Now, there were 11 million shares there. That price, by the way, is $97.34. You're at $98.19, and you're pulling back with pretty good volume. 2 million shares in an hour times 6, 12 million or so versus that 11 million there. So you've got Caterpillar pulling back with some pretty decent volume out here. Caterpillar, which is affected by the U.S. dollar index, the U.S. dollar index has been trading lower here this morning out here. So Caterpillar has got something else that is going on. The 0.618 retracement level, that happens to be at 96.57. You crack 97.34, your next level of support really becomes the high of October 22nd. That high is 95.98. That is what's going on inside of Caterpillar. Give me a moment here to move that over. Reduce that. There we go. Let's see, what else do we have? So let me take a look at set this up by weighting structure. So Visa is number one. Then IBM, that's up 28 cents. Goldman Sachs, Boeing is down $1.24. Let's go take a look at Boeing. BA is the ticker symbol. See what we've got here. This is the daily chart here for Boeing. Boeing coming down, testing its 9-day exponential moving average, right at the 133-ish range, at number 132.99 to be exact. It's got a nice little hammer candle down here, looks much like the S&P 500. That's the October 15th hammer candle. If we take a look at retracement levels from that low to the high that was put in here on a Friday, your dead cat bounce, your 0.382 retracement level would be 128.35. That is on Boeing. 754,000 shares so far, off of a high that was made with 2 million shares. So volume here to the downside, pretty good. Now, again, that was a light and trading session. Let's go back one day. Still only 2.6 million on the 26th, 4 million shares on November 25th out there. That's what's really going on inside of the Dow out here, which is the strongest of the primary indices that we would follow out here. So let's we don't need to summarize it because we still have probably 11 minutes worth of true airtime out here. But nonetheless, we'll come back to the VIX. Let's make sure that we know what our number is here that we're going to pay attention to today. 50-day exponential moving average. Well, gosh darn it. I'm going to have to do this a different way. I am going to just simply have to do this a different way. No problem. Always have a backup plan. So here's the VIX. Now what I got to do is put the 50-day exponential moving average on that. So give me a moment here to do that. Let me insert a study. Let me insert a moving average line. There we go. And apply. And let me go ahead and edit that so I can put the correct one out here. So let me move over to the moving average. Where did it go? Right here, I think. So let's change that to exponential. And let's put that at 50, and voila, we'll have it here in a moment. There we go. 50-day exponential moving average as we speak right now is 1457 is the number. So 1457 is the number to key in off of right now. You got the VIX trading at 1447. So 10 cents away. That's the number you want to be paying attention to today. The reason is because when the VIX trades above that level, you've got a... that's where most damage is done, when the VIX is trading above that. Of course, if it gets above that level, then we've got this interesting dynamic that Don and Odessa brought up. You probably have another second day in a row, 10% one or greater one-day rate of change inside the VIX, and typically you see a bounce within 48 hours, oftentimes within 24 hours out there. But it's only 70% of the time. So when it happens the other 30%, even 20%, in this case here, really since 2011, that would tell us something about the markets. Remember, we've got all these pieces of information that we can use to help guide us as to what's going on inside the markets. Of course, one of those pieces of information is certainly going to be the summation index, and the Dow is still slightly positive. That is not the case inside the New York Stock Exchange. That is not the case inside the NASDAQ Composite. That says it's changing its character. And, of course, speaking of character, we were looking at the character of the 2-hour chart for the NASDAQ, and we've said that this 4309 level, that is a change in character. This is the second hour. Now, this chart here does not end till 12 noon, so that's not till Basil is done, as Larry is coming on to do his show. But I can tell you, if at that stage you are trading below 4309, that has some meaning inside of the NASDAQ. That also says you've seen a change in character. Now, the real question is, just how low do we go out here? And that, I think this could be a real brief pause inside the market on the downside, and it behooves everybody to be looking for that next buy area. I've got some price targets in mind. The newsletter subscribers know that. They knew that Friday before we went into our short position inside the S&P 500. And folks, if you'd like, why don't you come on over to the homepage at TFNN.com. Go ahead and test drive Mastering Probability, and would love to assist you during the next, for the rest of your life, but certainly at least during the next 30 days. Of course, as you know, I've got the 7-week trading course that we had kicked off the Friday before. That was on November 22nd. That was the first of 2 workshops that I am doing. The second one is going to be on January the 9th. Yesterday or last evening, I sent out the first weekly update out there. So it's not too late for you to get in on that. Send your, it is a holiday season. Send friends and family. Tell them you want the gift of an education, a gift that can keep on giving. So go ahead and have them sign up for that. Let's go out to Philadelphia, the city of brotherly love, to a brother that we absolutely love. That's John in Philly. John, thanks for calling. Thanks for holding. How you doing this morning?
Good morning. Good Monday morning to you, Steve.
Thank you.
I have to hand it to you for your decisive action on Friday for all the right reasons. So congratulations on that action just there.
Thank you. Let's see how it plays out, huh?
Very good, Steve. What I wanted to do, just on your call, on your speculation that the S&P 500 cash indexes has made a short-term high, can you just share with us your parameters as to how important a high you foresee occurring here, what sort of downside targets you might suspect will occur, and round that out for us?
Specifically in the SPY itself?
Correct.
Okay,
or,
so
the S&P cash, the E-mini futures, or the SPY.
We'll do the SPY. You asked about the SPY, and more people trade the SPY out here, or at least can pull that chart up on their screen. I would say that for me, John, the level of on the SPY, probably about 201, becomes the area that I'm paying attention to. Now, that is less than the 0.382 retracement. So the dead cat bounce or 0.382 retracement, 197.96, that would be a normal spot for people to take a look at as a first level on the way down, if in fact we see it, be able to move down that low. No guarantee that'll happen. I don't know that the SPY, the S&P, the ES Mini will actually even make a 0.382 retracement during this move. I've got reason to believe there's evidence to support that it actually won't. And so I think this is, if there is a move down, that the first level to be watching for inside of the SPY is probably that 201 type area. Now, as you know, both you and I, we just simply take new information as it presents itself to us. So, if we see something like volume accelerating, now, ideally, what I'd like to see, as opposed to just a straight retracement, is some kind of pattern, some kind of small A to B equals CD, something out there, that might give us some type of signal. So I don't expect the damage to be substantial out here. And the levels I'll be watching, 201, 197.96 in the SPY. If it closes below that, then that says, okay, it's a little bit normal or deeper retracement. Now, I'd also be paying attention to maybe not even just 201, but just that high from September 19th. The breakout there, which was 201.90 to be specific. Sorry, no, it was 201.85, so 201.90. That's got to be an area that we pay attention to, because if it breaks back below that, closes below that, it starts to get into the lower part of the range out there. So, my decision-making, I will say, has come from the 120-minute chart inside of the ES Mini because of the number of patterns that had confirmed out there. So I'll be paying close attention to that 120-minute chart. So,
Steve, thanks so much for that elaboration. Do appreciate it.
My pleasure. That was John in Philadelphia. Folks, 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 72 right now. S&P down 17 points. Composite off 60. Russell's down 15. Russell has been weak out here. You know, if I go back to John's question about really what's the expectation out here. Now, this is the chart here. I've shared this with you in the past. This is the chart over the last 43 years, excluding 1987, the crash of 87, just simply, and this is by day. So it's the seasonal average. In fact, it really helps take away and help you understand that the so-called 6-month unfavorable seasonal cycle, which starts off with sell in May. Of course, May is not when the majority of tops are made during that 6-month cycle, May 1st through October 31st out there. Likewise, the bottom during the kind of a 6-month favorable seasonal cycle, or the major bottom, actually takes place inside the market during that sell in May cycle out there. And that bottom is the one that we saw on October 16th. It typically happens around October the 7th. We don't need to get exact. What we want to do is always be paying attention to patterns out here. Now, if we just simply fast forward, there should have been some other moves to the downside that would have taken place. November 2nd was one of them. That was that October 31st move. October 31st, when the Bank of Japan went ahead and said, hey, we're turning our pension fund loose. They can go ahead and invest in equities. We're going to continue to weaken the yen against the U.S. dollar index out there, and the markets moved higher. And I said, hey, this market ought to move sideways to pull back over the next couple of weeks. That was based on this pattern right here that my cursor is circling around, because that was the seasonal pattern out there. We really didn't get that. Well, the New York Stock Exchange somewhat, the Dow absolutely not. The S&P a bit, the NQ we didn't. This is, of course, this is based on the S&P 500 seasonality. What we did do is the price moved up into Friday out here, Thursday and Friday. Actually, in the S&P, it was Thursday when it made its high out here. This red arrow is where we're at right now. You can see the retracement here, which could last a week, could last a few days, could be over by 11:05 when Basel comes on, for all I know. It does show somewhat of a shallow type retracement. And look, the mere fact, don't pay attention to this drop off. This is just a that if I could erase it on the way that I developed this chart, I would. I can't. So it's just not like a big sell-off on December 31st out there. And this market ought to run in to really till next July. So I'm looking through next July for the market to possibly make a significant high out here. That doesn't mean that it's a straight shot on the way up. In fact, right now this number, and really what I've done is just shifted to, I just use this as really a guideline. It's not as simple as just using this as your entire market out there, a marker. What you want to do is you want to take a look at other patterns that help provide signals. And the other thing that we just simply want to do is just use proper money management. We use proper money management. We will live to see another day. And when you talk about this game and this business, that is really what it's all about out there. So, whether it's a shallow retracement or not, that I don't know. That's why what we'll do is we'll pay attention to the patterns. We'll certainly pay attention to volume. We'll pay attention to, summation index. We'll pay attention to the VIX index. There's enough things for us to focus on. We'll also pay attention to that euro, Japanese yen. At this stage here, not really doing a whole lot, but if we were to see some kind of major move to the downside out here, it's got pretty significant resistance out here at the November 20th level. But right now, it's just kind of moving sideways. That actually bodes well longer term for the bulls out there. So, folks, hopefully how about that? Do I sound like a Southerner or what? You had a great Thanksgiving holiday. Thanks so much for joining us here. Stay tuned. Basil Chapman is up next. We can go ride the wave, go get your surfboards out. Hey, if you were down here in Florida, you can absolutely go surfing. So come on down and join us. Have a great Monday, folks. Look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.